The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We start out the show like we usually do, taking a look at the German DAX. As you can see, it had a little pullback on Friday, had a pretty strong move starting this morning, and we're seeing pretty much the same thing when we look at the FTSE, which has been the stronger of the two indices for sure. And of course, when you take a look at that, you notice they're in the midst of the Brexit thing, and the German market is in the midst of a very, very bullish bond market that's pushed yields way down. And that means there's not been a flight to quality in the bond market. Now, let's just take a quick look at that long-term bond market, folks. I want to bring it to your attention here. This is the weekly chart of the German bond. That's equivalent to the 30-year bond. This goes back over the last 3 years. You'll notice that we completed an ABCD pattern. It went right up. We started a little lower this week, as you can see. We did not get above that critical 167 level, which could be, very, very interesting if it gets above that. But so far, it has not done that. But we'll be watching it here on a shorter term basis, because when you look at it on a shorter term basis, which we always do here, is we'll take a look at this German bond, and you'll see these beautiful colored pictures. You can see these going up and making the final three drive to a top pattern up at that area, where we're looking at. See, our original premise was it was going to stop around 66.24, and we went up to 66.78. That's a little bit of a discrepancy. Now let's talk just a little about these colors, because I had a very interesting email over the weekend to talk about these colors that come up, and I wanted to show you how all this started. Let me just give you an example here. This is the E-mini S&P from Friday. I'm just going to draw in the patterns. These are the patterns that I used to draw in the charts, high to low, high to low. That's all I was doing. Didn't know any expansion numbers. I barely knew 618 and 1.618 and 382 and 50%. Had no clue about 78.6 or 1.27. We did know 1.618, but I had no clue about these other ratios that are very, very important. Remember, folks, this is 1972, 1973, and I'm getting my charts from Commodity Perspective. These are charts that are, I think they were 17 by 14, very, very large charts. They came by special delivery every Saturday morning, almost exactly at 9 o'clock, so I could start working on them. And I would start drawing my little triangles. As you can see here, I was drawing these triangles all the time. And when I was finished with the book, my daughters, Laren and Jill, would like to make them into a coloring book. And so they would take their little coloring crayons, and they would color these in, and then they'd take their little plastic scissors, and they would cut them out, and then they would put them on the refrigerator. And I would look up there and I'd say, man, these are really cool looking triangles. And I said, some of them look like butterflies, others look like airplanes. It wasn't for, till 13 years later when I met Bryce Gilmore that it all came together for me that I can understand. But look, here's what one of these patterns look like. I did it myself. So the artist conception here is a little bit skewed, but as you look at this is exactly what the girls were doing, and they were drawing in. They were just taking those triangles and then coloring them in. As you'll notice, I had some of them done by the machine itself, and then the red one I did myself. But you'll notice that if you'll overlay these patterns, in other words, if you overlay the gray one, you'll see it's almost identical to the gray one on the left side. The red one is almost identical to the one on the upside. And that's what you're seeing all the time in these markets, because it's doing nothing more than repeating what it did in the past, because what happens in the past happens in the future. Now with markets, they expand and contract. And when they expand and contract, it moves to another pattern. And that makes it, a little more difficult because you have to wait till that other pattern completes before you can actually draw the triangle. What we're trying to do is to come to these areas where you have 2 and 3 colors that come together, i.e. these triangles, and that'll tell you that, there's something happening here. Don't know exactly what it is, but I know if I buy it here or sell it here, I know exactly how much I have to risk, because if it goes beyond these points, there's something probably pretty wrong. So that's the main thing that you're looking at as you're looking at some of these patterns. But that's how these patterns started. Later on, when I met Bryce Gilmore in 1988, he introduced me to the Wave Trader program. The Wave Trader program would do this particular diagram with the colors, multicolored, yellow, blue, green, red, and they would be flashing, and they would give you a ranking of 1 to 10. In other words, 1 meant there were a lot of these patterns coming together, and 10 meant there were a lot of these patterns coming together. 1 meant there was virtually nothing. So what I tried to do, and I was sitting there each day with Steve Shapiro, my good buddy, and we would trade these number 10 patterns. And after about 3 or 4 weeks, we went out to dinner one night and we had celebrated because we had finally found the Holy Grail. Because when you got to a 10 with Bryce Gilmore's Wave Trader, it never failed. I mean, must have had 10, 12 trades in a row. And all of them were pretty good winners. The problem is when it stayed at 10 for several days and then kept going in that direction, because then that was a failure, and boy, oh boy, you did not want to get in front of that. And then we started to realize, maybe this is not the Holy Grail. But during that time, it was really amazing to see these patterns unfold. That's where I came up with the butterfly pattern, which is nothing more than a failed Gartley pattern. A Gartley pattern is where you have a lower high or a higher low, but with a butterfly pattern, you have a higher high or a lower low. In other words, it keeps going and it fails. The Gartley pattern fails and then moves in another direction. Speaking of Gartley pattern, we had one of the big ones that we've been watching for the past 2 months here. Actually, we'll take a quick look at it here. This happens to be one of our old favorites. This is Bitcoin, and thanks, Terry. If you'll take a look at this, you'll notice that the D level hit exactly at the exact price. It went $25 a share under the actual price we were looking at, and it hit it spot on, and it had a huge, big volume day over the weekend here. And you'll see that it had a pretty big run here. We went from 33.50 all the way up to 3,700. So it moved 350, moved 10%. Now, whether this bottom is going to hold or not, we don't know. But this is the first buy signal that we've had in Bitcoin for quite some time when you look at it over a longer period of time. So I think if we keep an eye on this, we might find out if this is going to be something a little bit more different or whether this Bitcoin is not going to mean very much. This is all about blockchain technology, folks. It's really not about the cryptocurrencies. It's about blockchain technology where the cryptocurrencies will come together with it. But at least this is what I hear from some people that are much, much smarter than I, that understand this stuff a whole lot better. But that's what's happened in Bitcoin. That is a perfect Gartley pattern. You have the ABCD stopping exactly at the 78% level. We're going to have a break here, and we get back. We are going to look at a market that was alerted to us last week by our good friend Mr. Z, and I want to show you what he said might happen and what did happen. We'll be right back. 877-927-6664.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I'm going to bring up this chart of natural gas. This is the wildest thing that you can trade. It moves faster and more often than anything else, but it is certainly tradable. We owe our thanks to Mr. Z on this one. He talked about this way back when it was back in February of last year, when it was, it was in June of last year, when it was trading at about 255. No, it was about 275, I believe. Of course, it went up to the 618 at 490. But let's look at it now. As we look at this, you can see the cycles on the bottom. Folks, that's a 50-week, basically a one-year cycle. You'll see 50, 100, 150. So it's a one-year cycle. Usually it bottoms in February or March. As you can see, 2016, it bottomed in early March. You can see in 2017, it bottomed in late February. And in 2018, it bottomed in early February. And as of Friday, what happened was we took out the low of 2018 by 50 cents. That's $50 U.S. money in the natural gas, and it immediately jumped $3 or $4 a cubic foot. And last night, of course, on Friday, it closed right near the high of the day. It's a weekly chart, so you don't see the weekly close because the close on Monday was much higher. It was around 298, I believe, but no, 288, and but it closed right near the high of the day. It was the high of the day on Friday, and then of course last night it gapped up about $5 per cubic foot, about $500, and it immediately moved another $1,000. Overnight, and is still running to this date. This is a possibility of being a very, very important triple bottom here in the natural gas. Remember, all during this time it was coming down. We had one of the worst storms we've ever had, Storm Maya, which brought in, cold enough weather to freeze part of the Niagara Falls. Rich Anderson was looking at weather of 22 to 32 degrees below zero up there in Minneapolis, and then they had a blizzard yesterday. So even with all that bad weather, this natural gas still came down and potentially made that triple bottom. Folks, this is such an important bottom here in natural gas. Pay attention to that, because if you see an ABCD pattern here over the next day or two, or today possibly, if you see one on a 30-minute chart, take advantage of that and watch for 382 retracements if in fact you're watching natural gas. I'm going to be watching for it just for educational purposes, so you can see how well this stuff actually trades. It's got great margin advantages too, because they don't ask for a lot of margin, and it is really wild. It moves $1,000, $2,000 a day, like it doesn't even exist. So it's very important. That's a triple bottom there. Really nice cycles. That means there's a seasonal there coming in February or March, and here we are in the middle of February pretty much. And so that's something that we want to watch real closely. So we want to thank Mr. Z for that. He brought this to our attention, and it is one heck of a thing to look at, to trade, because it was in a buy mode all day Friday after that low was taken out really early in the morning. There were no stops there, which, when you see a market goes below the lows of the previous year and there's no action, that means there were no orders sitting there to sell it, and that's something that you got to pay close attention to. We've got a couple other commodities that need to pay attention to today. In fact, there's three of them. We have cocoa, coffee, and sugar. All of them are at really key levels for importance. If we take a look here, we'll do this one for Ruby because I know she's watching it very closely here, and we'll bring this up here. You'll see that we're down near this 2255, 2260, 1245 to 1265 in the sugar this morning. If we get down to that 1230 level, that's the 61% retracement. It's very important that sugar holds that, because if it doesn't, you're going to be looking at a potential move all the way down to that other bottom at 1170, and that's quite a bit. That's about a $700 move in sugar, and sugar is like trading corn. You're not going to get hurt very bad, but you can be consistent with the money that you're looking at. Yes, we're talking about the euro here in the TFNN den this morning. We are looking at the euro very, very closely. We've had a strongly bearish bias with that. I've got to get back to, I'll do the euro quickly here. You'll see here when we're watching the euro that we're still looking. We've made a double bottom down here now at this 1295 level. I don't know if we've taken it out as of yet, but that tells us that we're going to get down to about 1190. That's going to take out that daily number. I'm going to cover that just a little bit. I want to cover the other the futures here, because we had several questions from our folks over in Singapore and Hong Kong about a couple of markets, and I do want to bring up the cocoa to show what we're watching here in the cocoa. It's holding up so far this morning, but you'll notice that we had that really nice 135 pattern. Back up, beautiful pattern. You can see the low on the where pattern 1 completed, pattern 3, then pattern 5. That those lows are symmetrically perfectly. They just can't be any better. And your swings down are equal. You're sitting right at the 78% level. It moved a little over $1,000, almost $1,200. In that first run where it was up 5 days. Now it's backed off for 3 days. It's testing that level today. So if it doesn't hold, that means it's going to break down. But when the first pattern completed at 0.5, it was, pretty much spot on. So this is why we're watching that one, so very, very closely. And then we need to take a look at the last one, which is the Morning Joe. We want to take a look at the coffee. This is something that the old cowboy hasn't traded in 45 years, and I have no intentions of doing it now, but a lot of people are doing it, so we'll pay attention to it anyway. You can see here in the coffee that we've been in a really tight trading range since mid-December, all through January and early February. We've been as high as 107 and as low as par, $100. We're trading this morning at about 103. So as long as we can hold that $1 level in coffee, then you should have a pretty good move to the upside. It has some potential to do that. Now, commodities are bottoming in our opinion, and whether that has anything to do with the tariffs. These tariffs would not have anything to do with coffee because that comes out of Brazil and Africa. So you're not going to see much in that realm as far as anything really exciting coming out of it. Now they're chattering here about the euro. Let me get the price up here for the euro so I can see. And where are we at here? Did the euro break down that much? Yes, it did. It broke. Oh, well, there we're getting some action in the euro, 12.85. We're also getting some good action in the crude oil, folks. And that was one that we really were interested. Wow, we got up to 275 in the natural gas. Boy, that's one big one. Let's take a quick look here at this euro on a little bit bigger time frame here, because this is really super, folks, where we are. I mean, this is I spent most of the weekend in the newsletter with the euro and also the stock indices because we were at such critical levels. You'll notice here we closed at 13.21 on Friday. We're now trading at 12.85. We've taken out the low of 2 weeks ago. And remember, the 61% retracement is sitting there at 12.20. Folks, if we take 12.20 out, you can see, just looking at this, you're looking at somewhere between 109 and 105 in the euro. And remember that 382 that we had way back in September, right on the equinox, that was a perfect 382 retracement, and that's what set up this ABCD pattern on the weekly that is so bearish. So let's pay attention to that. But let's pay some bills for TFNN right now. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a look here at the long-term picture of the crude oil. You'll notice this is the weekly. We made that 61% retracement up there a couple months ago at that $77 a barrel. Now we're trading at $51 a barrel. The key here was last week we rallied up to exactly the 382 retracement. Took just about a month to get there. Hit it spot on within about 20 cents, and now we backed off almost 20% since that level. We're down more than no, that's not right. 20%. We're down about 10%. Let me see if down about 8% from that level. So I believe that we're heading towards the $49 level in the crude oil. That's only $2 a barrel from where we are right now, trading at 41 and change. So it's 51 and change. So it looks like that's what's happening right here. I want to switch for a moment to the FANG stocks because, folks, we've had this big rally since December the 26th, and that's been one heck of a rally, one of the biggest ever. But let's look at some of these FANG stock. We'll start out with the biggest one of them all, which is being promoted today by our good friend, Mr. Jim Cramer. And you'll notice that it couldn't quite make the 382 retracement from our high way back in October 1st when it was trading at 235. It dropped $95 a share down to that 140 level. Then we rallied up about $30 a share up to that 177 level. Not quite the 382 retracement, and that is not a very bullish sign, folks, when you look at Apple as you're watching one of the FANG stocks. We're going to go through each of these because we believe they're all very, very important. The next one we're going to do for our good friend Jeff Bezos, who's in the news all the time now, which he doesn't want to be, but he is. You'll notice the Amazon bottomed also on December the 26th with a perfect 3-drive to a bottom pattern. Just couldn't have got any better than that. And if you wanted to really define it better, if you would look at the lows between drive 2 and drive 3, you'll notice that they were down equally the same numbers of days. That tells you that there's a lot of symmetry there. When you have the ratio lined up, you could get out your little plastic scissors, color it in, and say, I think I'll take a shot at it here. But we had a 50% retracement back from the high that we made back in October, and we also had a 78% retracement from the high in December. It was weak on Friday, whether it was due to all this junk that's going on about Bezos in the news, I don't really know, and I don't really care. If I had $127 billion, I would tell them to all take a flying leap at a rolling donut because it wouldn't make a darn bit of difference in what they're going to think. So I don't know what's going to happen, and I don't really care. Let's move on to the next one. This is one that has been very, very active. And of course, this is the Facebook. It got hit the worst. We went from 220 all the way down to, here was another one dropped $95. It dropped all the way down to 122. So then we rallied up to the 78% retracement of the high in August and a 50% retracement from the high in July. So we got this huge gap staring us here in the Facebook. Of course, we also have a gap up at 192, but you'll notice these gaps get filled. So we should fill this gap between 167 and 150 in this at some time. But right now it's had one heck of a rally from 125 up to almost 175. It rallies $50 a share, but it took exactly a month to do it. Remember, it dropped from 220 down to 175. It dropped that same $55 in one day. So this is a lot riskier than trading natural gas, I think. So we'll see what's going to look at this. Okay, Bob in Spokane, I want to shift gears here, Bubba, because I think you ought to pay. Just let me bring this up to you. Now, this is my 2 cents worth, Bob, and I know you got enough snow up there to last you a lifetime. But if you're looking at that gold, let's just take a quick look at this because I think it's, oh, shucks, just a second here. I've got to move this around just a tiny little bit, and then we'll get it running here. I want to show you this 4-hour chart in the gold market here, Bob, because it really, really set up for a really nice move here. And that is right at the 12.99. There's very strong support there. Hey, Bob, you go ahead and buy it, pal, because I'm wrong a lot. So just be careful there. You don't have to risk very much. I agree with that. The risk here is really small, and that would give you enough money to try it again if it gets to $12.99. If we get below $12.99, there's trouble in the gold market, and we're probably going to break down a whole lot more. So watch that number, $12.99. It's very important. Remember, the euro and the gold tend to run together, and if that euro keeps giving up the ghost and heads towards that below that 1200 level, below 1200, you're looking at 11, 10, 9, 8, 7, 6. I mean, it's going to go down a lot. That means that U.S. dollar is probably going to go up a bit too. Let's get back to these FANG stocks because we've had several requests to take a look at these. And the next one we want to look at, of course, is Mr. Google himself. This is, in fact, one of my favorite stocks. I think this is probably one of the best companies I've had the experience of using because I use Google all the time. I used it last night to check something about an old movie that was on. It happened to have one of the old character actors that I used to see at Hollywood Park a lot. And I wanted to see, when he passed away and stuff. Anyway, let's take a look here at the Google chart. You can see here we rallied here again. We didn't quite make the 61% retracement that came in at 1160. We got up to 1147. We missed it by $13 and had a big gap down. Nothing really happened on Friday, but this is a bearish pattern. We had a really nice ABCD pattern right on the bottom here again, right on December 24th. And folks, that December 24th, 25th, 26th, that was so important. We had that 3 drive to a bottom pattern in everything. I mean, NASDAQ, Dow Jones, S&P, Russell, banking index. I mean, it was everywhere yelling and screaming, this is a bottom. Now, whether it's going to stay there or not, we really don't know. So we'll see what's going on. Bob, I didn't mean to affect your trading on that because I have a bias to buy the gold at $12.99, and you're probably right at $13.07 because you put your money in it and I didn't. So my opinion doesn't count. Yours is the opinion that counts. So please, spare me that a little bit. By the way, Bob, did you get a lot of snow in Spokane? Because I know Seattle got a foot of snow, and I don't know if you got that much coming across the state or not. But boy, they sure got hit pretty badly up there, which is very, very highly unusual. Looking at that. Okay, we want to look at the last one, which is another one of my favorite of the FANG stocks, and that is the Netflix. And when 9 inches of snow coming today in Spokane, shut the front door. How about you, Marshall? Did you get lined up with the snow? You're quite a ways from Seattle, but I just don't know if you notice that the Netflix did get to the 61% retracement. We made a double top there in January and February, but the key here, folks, is the one thing you've always got to remember. Look at that little arrow that's there that shows that little square. That's the day the Dow was down 600 points and Netflix closed higher. Folks, if you're in a stock that is, and you're short, and the stock market's down 600 and that stock's not going down, trust me, somebody knows something and they're not telling you. So don't sell stocks that are much, much stronger than the market. 877-927-6648.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, folks, I want to post a chart here from one of our listeners here at TFNN, and he makes a terrific point. This is the S&P 500 futures as they closed on Friday, but the point that he's trying to make, and it's a really valid point, you'll notice the purple line that you see there at the bottom where the market bottomed on December 24th. Of course, that is the famous 200-day moving average. That also happened to be an ABCD completion, and again, it was also at a 382 retracement of the low from 2016. But the point that is really important here are the stochastics. As you can see them in the middle of the chart, it shows the slow stochastics and how they're turning. But the point that he's making is this is the fastest they have turned up in the past, I thought he said 60 or 70 years. And every time that's happened, the market has gone a whole lot higher. And believe me, folks, if we get above 2740, this is probably what's going to happen. But right now, we'll see how it's going to act here. We're very overbought right now in the market because we've been straight up for 6 weeks, so we're due for a some type of correction if we do get one, but we'll have to wait and see. Keep that in mind because that's a very, very important thing, you know, to pay close attention to, because it's a factor of the market because of the speed of the way that it comes out of that bottom was extremely, extremely important. One of the reasons why I have sort of a bearish bias coming in this weekend is if we look at the banking index. This was one of the ones that told us that the top was in, because you notice this top last January, the banking index topped. It made the secondary top with the, you know, the Gartley pattern at the 61% retracement at 111, and when it went down, it completed a perfect ABCD. But notice on the rally back, we could only rally back 50% from the high and also 78% from the high in early December. So this is telling you that it's slowed down a little bit, due for a correction. That's what we're looking for here, is a correction. How much we're going to get, I'm not sure. By the way, we're going to have one of our favorite folks on tomorrow. They're all favorite, but some are really enjoyable more than others because we've known them a lot longer, and that is my buddy Stan Harley will be on tomorrow. And he'll be talking to us about some of the things that he's looking at. And hopefully on Friday, we're going to have Bill Meridian from Cycles Research on. That's what I have planned right now. And we'll see how, you know, that works out. But anyway, we'll have those on. We'll pay close attention to it as we look at that right now. Okay, let's move on to the next one I want to talk about. And we've had a request from someone to talk about Intel. One of my very, very favorite stocks. I was fortunate enough 25 years ago when I first moved to Tucson. A gentleman called me up from the far north, and he said he wanted to come down and visit me, and he happened to be one of the first 10 people that was employed by Intel many, many years ago. He's since passed away, but a really, really nice gentleman. You'll notice that this is the daily chart of Intel. You notice that it topped long before the rest of the market, which topped in October. Intel topped in May, and it was a 3 drive to a top pattern right at a perfect 1.618 expansion, also a perfect ABCD, and the market went from 57 all the way down to 42. That's about a 30% drop, and we made another little Gartley pattern. You can see here on December the 24th, and we had a pretty good rally since that time. So we'll see if that's going to be the case. Folks, there's something wrong with this chart because I noticed that it didn't update, shut the front door, and raise the rent. I've got to fix that. That is not good. Yes, I do want to mention you mean the one for Larry Williams, Marshall? Is that the one you're talking about? I believe it is. Larry Williams is given a free seminar through TradeStation. And go to TradeStation, folks, and it's really worth it. Whenever you can listen to Larry Williams, listen to him. I've known Larry for, let me see, it's been 55 years now since I met Larry. And when we were living in California, and I've got to know him, over the years. But he's got great information. He's got some new indicators that he's showing to people, and I think you should pay attention to it because he does a lot of research. He has a couple of guys that do nothing but do computer research for him. And so we'll be watching it. INTC. It is the correct, Bob, but the problem is I didn't update it. That's my problem, and I'm going to do that right now. That's silly for me to do that. So bear with me here one minute here, folks, and I will get this put up here because for some reason they asked me to look at the chart and I didn't. INTC. Oh, here it is. Hold on just a second here. What did I do wrong here? Oh my goodness, this is it's a lot different than I thought it was. Hold on. Yeah, it's gone. Here we go. We went higher, not much. We're still in that same ballpark. I mean, this is not the end of the world. We're only $2 higher than that chart showed. But let's take a quick look at it. Here it is updated. That's sort of embarrassing, but that happens to me all the time. There we go. Here we're trading at 49. The last time I was looking at it was 47, so it's about $1.50, $2 different than where it was. We really haven't gone anywhere. It's up a little bit today, but this has been a much weaker than market stock. So I really don't think it's going to go very far. I would look at other things. It's the number one chip maker in the world, so something to pay very close attention to. But it's been it's one of the better traded stocks because it's so big, and it trades, I think, 5 million shares in the first hour or something. It's just huge, the amount of that they have at that point. Very good on your gold, Bob. Congratulations. You bought it spot on. You've already made almost $300 in it, so I think you got a winner there. If I were you, Bob, I would not let that go to a loser because you bought it spot on the bottom, and you're up $300 right now. So that's $300 in your pocket. I wouldn't let anybody have any of that. So that's my 2 cents worth. So we'll see. The bond market is a little weaker, which is hard to believe given the fact that stocks were stronger. But I'm still bearish these bonds. I think we got a pretty good correction coming, if not a whole new leg to the downside. But that's going to be happening, not right away. So we'll see how things are moving as we go through some of these things that we're watching here this morning. We're having a pretty good. Actually, talk about natural gas. We've gone from 255 on Friday up to 274. That's almost a $2,000 move, and we've just corrected $700 in the last 30 minutes. So natural gas is doing its thing. Now let's take a quick look here. Since we're going to be looking at this natural gas, you don't necessarily have to trade it, but let's just take a quick look at it, and let's see what the 382 level is, just to be safe and just to see where you are. And here's where we are. The 382 comes in at 267. We're trading at 267, 268 right now. 267 is the 382. It's very important that it should stay above that level. And with this big wide range down that we're having right here, it's going to be interesting if it can actually do that. So we'll see it as it unfolds, and we'll follow it through tomorrow because it's the pork bellies of the energy complex, folks, and it really rocks and rolls. It gives you a lot of opportunity to win, and it gives you a lot of opportunity to lose. So you got to pay close attention to it when you're trading the natural gas. It's really a big one. Okay, what do we got? Oh, we got a break coming up here, and then we want to talk about one other thing, and then the show will be over, and we'll be having Stan Harley on tomorrow. Remember, go to, oh, somebody already put it in. Marshall, thank you very much. That's great. Yeah, Marshall has put the link in there if you want to listen to Larry Williams. I highly recommend it. I'll be watching it. So 877-927-6648.
The universe provides us with opportunities all the time, and I was no different. In 2006, I invested $2,500 in a 2-day Master Trader course taught by Tom O'Brien, then ranked as the #1 market timer for gold. The fact is, if you want to be the best, you must learn from the best. Hi, I'm Steve Rhodes, author of Mastering Probability and the Market Timer of the Year for 2018. To celebrate this accomplishment, TFNN.com is offering you a free 2-week subscription to my award-winning newsletter service, and there's no charge to you until day 15 unless you cancel sooner. That's right, we're waiving the normal upfront deposit, and this offer is available to anyone and everyone, even if you've tried Mastering Probability before. Sign up now, and I'll teach you the tool that identified the bottom in the Dow on January 26th, the morning that led to the largest daily point gain in history. This offer will expire on February 10th, so go to the homepage of TFNN.com now and click on Mastering Probability.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I wanted to bring to your attention one other thing, and that is the dollar index, because this is the long-term weekly chart. This is the opposite of the euro, of course. You'll take a look at that. You'll see that you're looking at a situation where you've had a head and shoulders pattern, a beautiful symmetrical one. It was exactly 90 weeks between high and high. The right shoulder lower than the left shoulder, exactly at the 61% retracement there at 97.52. We came down for several weeks, and now the last few weeks we've been a little bit higher. And this is what we're looking at here, because if we pop above that 97.50 level, that means that the euro is giving up the ghost, and that means that the dollar index is going to be going higher and the euro is going to be going lower. Hats off to our friend and leader, Tom O'Brien. Way back in 2011, he coined the phrase King Dollar. And boy, that King Dollar took off. It went from 73 and change all the way up to 103. And now we've had this big correction that took us down to 88.50, which was a 61% retracement. That was that major support there at 88 that we brought to your attention many, many weeks ago. As a matter of fact, it was January of last year, 2018. And now we've had this last little correction here. So any move above this 97.70 level in the dollar index is extremely bullish, folks, because it'll be breaking the head and shoulders pattern, and it will be breaking into new high ground, and that means the euro will be heading, substantially lower. So do one thing, folks, that's live every day in an attitude of gratitude, and may God bless. And we'll see you folks on the flip side tomorrow when we have Stan Harley of the Harley Stock Market Cycles as our guest. He'll be talking to us about this important day that we had back on December the 26th, and also the day that we're looking at today. It's a very important day. 877-927-6648. May God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.